Hello, Warriors, TGIF. Maybe it means thank God I found TradeGateHub and Mike and Dale's analysis. So, besides some analysis, I want to do a little teaching here today. And I've brought this up with other trader friends before, and it's a psychological issue when it comes to trading. So, if you've been following me for a while, when we were up here at 111 and I was booking longs in Euro, went to 1140. My target was 107 to be a buyer. Okay, so we got there this week, or at least within inches of it. What was the low here? 107.22, about 10 pips away from 61.8. But as we got here and the way we got here, it began to have me doubt whether or not I should get long because yields I still think are headed higher. So that started to build doubt about what I should do. So uh, I believe that's happened to everyone out there. So this is how I resolve it. I call it a just in case trade, where you put something on. It could be small. It's not going to bury you if Euro makes new lows. In fact, maybe you get into the trade here knowing that if we trade down to 106, you're adding and you're buying. Because if we're here and it turns out to be the bottom and we get a huge rally, you feel like a clown because you've been waiting for this move since, well, not that long. Where was the 111? Let's go to the daily. You've been waiting for this move for weeks, right? December 23rd. So, about 6 weeks you've been waiting for this level for it to get here. And then it gets there and you go, well, maybe we're going to go 78.6. And we could. But if I don't have any exposure to it and this was it, I should at least have something on. So that's one way to solve the psychological issue of you don't have the same conviction about the price at 107 that you did here, that it would be a great buy when it's here. And it got very close to 107. So I'm long Euro from yesterday. It's a just in case trade in case this turns out to be the bottom. And that's something that it's a teachable moment so that you just put on something there. And I didn't do it at the low. I waited to see if we could put in a higher low, and that was yesterday. So, if I want to use a stop, I could just get out of the way under 740. And even if I want to stop under the low, it's a 40 pip risk to not be aggravated if we turn up from here. Because on a weekly basis, it's trying to put in a weekly reversal to the upside, just like the dollar is putting in or trying to put in a reversal week to the downside. Doesn't mean I'm looking for a dollar crash, but we could still pull back to 102 before we run again. So that's something I wanted to talk about. Aussie, I didn't do it. Aussie looks even a little better. Maybe Aussie's going to rally. Back here a few months ago, I was looking for 64.50 and we got there, well, 64.68. And then I started looking for the 78.6 here at 64. I'll be patient for that. And one of the reasons is China gave it all up. I hope you caught the interview with Bob Elliott this week when he talked about the intervention. If not, go back and learn about how you trade interventions. And he talked about the intervention in the stock market by China. And, we had a decent little pop in the FXI. We're already giving a lot of it back. Okay. So that's another reason. Excuse me, here's the FXI. So FXI looks like it could have new lows in it. And Bob said, unless you change policy, the intervention is not going to succeed, and they really haven't changed policy. So there's FXI. Here's BABA. very close to making a new low. Looks like we'll get a third drive. So that's another reason I'll wait on Aussie, because up until the last day or so, it's acted weak. We had the Bank of Mexico yesterday. They did nothing. They didn't lower rates. And I still like Mexico, what it's doing, even though we're down today. We are forming some type of right shoulder here. Gold, finally, some errors coming out of the beach ball because of every break we've had over the last few weeks. They're being bought, and it keeps holding. But now it looks like we're going to get this break under 2000, headed towards the 200-day around 1960 is the level I'm looking at. And there was absolutely, silver had a great day yesterday. Silver, they turned the gold silver ratio. Silver was up 40 cents. It's reversing a little bit here. I'm still going to be patient for 21. And, when you have a day, I could only imagine, because I didn't get long yet, you're long the silver shares. Was silver up 40 cents yesterday? Nice reversal. And yesterday, we had a down day in the silver shares and continue to look pretty heavy in the silver shares. So there was no reason for me to buy him yet. Still no reason to buy him yet. And the big picture that I showed yesterday when I was on with Mike is the GDX getting down to 25. Let me break out my telescope here. Let's look at the monthly. Okay. So again, we have the symmetrical triangle. This rally here that we had from October of last year, 78.6 back is 24.63. You have a couple of speed lines, the trend line of the triangle, plus a speed line off prior lows coming in there as well. So a lot of confluence, 25-ish. That's when I believe I'll start accumulating the miners. So keep that in mind. I talked about the big round number in S&Ps above 5,000, and we've gotten there. They tried to sell it off, and I want to do a little teaching on inside candles, inside days, inside weeks, and I'm going to use Apple as the example. What a coincidence. So this applies to all instruments with inside days. So here's the weekly in Apple. We're still not making new highs for the move. In fact, we've gone nowhere since last July. But you see this candle right here? It's inside the prior week's range. So what I'd be looking for, especially if strength continues in equities, would be an outside. The most bearish thing Apple could do after this week is take out this week's highs. Doesn't have to do it by much. It could be, 20, 30, 40 cents, maybe a buck, over 91 early in the week, and then later in the week or wherever, take out the low of the week at 185.84 to have an outside week to the downside. And, we were talking about 180 being an important level on the daily, and it still is. It's a descending triangle here. All right. But we also had moving averages before at 180. They're coming in higher now. But if you look at the weekly, now the 50-week moving average tagged the low after earnings last week. So we take out 180. 160 is doable. And if you're an extreme bear, the 200-week is 146. So when you have inside days, whether it's a 4-hour, a weekly, a daily, look for outside days for a market to take out both the high and the low, and wherever it closes in that direction is going to give you a nice signal. So I love neutral weeks because they set up what could be defining signals the week after. So that's all I wanted to cover. One other thing, the Dow, I want to show this. It looks really like a 3 drive to a top. It has a much weaker RSI pattern. See this? Here's drive 1 confirmed. Here's drive 2 under 70. And here's drive 3, which it just made today, right here. Very low RSI reading. So that's pretty negative. We'll see what happens with NASDAQ and the S&Ps. They've done nothing wrong on a weekly basis, but it looks like the generals are beginning to retreat and they're leaving the troops out there to fight the battle. So we'll see what happens with that. Interest rates, talked about bonds still having lower to go to take out this low. And we had kind of a benign inflation report, but yields are still pushing up. Over 420 is a breakout. That could take us to 440. I don't think the market's going to be able to ignore 440, 450 on a 10-year yield. So it's Mike and my hope that you're learning. If you really want to learn, surround yourself with traders better than you. That's why I hang out with Mike. And come into the room. We'll answer your questions. Bring your best work. It's free. We're not trying to upsell you a subscription. And come in here and be part of a community that is whose mission is to edify you and make you better at a difficult endeavor. So have a great weekend, everybody. We'll catch you next week. If you're a geopolitical nut, I have a great interview set up for Wednesday with someone who really can give us answers about what's happening in Ukraine and the Middle East. And I'll probe her on what she thinks is going on in Asia as well. So that's a wrap for me. Remember, don't just count your pips, count your blessings. Be patient. But when markets get to your area and doubt begins to creep in, put on something instead of trying to be perfect. Because as I say, you can't expect perfection at the crap table. Roll them. Adios.